क्या आपको लगता है कि आप इन्वेस्टिंग की दुनिया में भटक रहे हैं? और आर यू स्ट्रगलिंग टू मैक्सिमाइज योर एनुअल रिटर्न्स टू अप टू 30 to 40%? Or is it that you're having a tough time deciding what investing plan is right for you? SIP or lump sum? Plan जो भी हो, the main goal of both of them is to give you the freedom so you can retire early and break out of the boring 9 to 5 cycle. Either way, you are at the exact right place, because today we are going to walk you through what is meant by an SIP and a lump sum investing plan for, let's say, investing in a mutual fund. And after that, we'll compare a few scenarios and decide which one of them is actually more profitable or better than the other. So make sure to watch till the end to find out. It's not always like you need to be an investing guru or some sort of an expert at investing to make great profits. According to the man, Charlie Munger himself, you do not have to be brilliant, only a bit wiser than the other guys than average for a long time. अब इस quote का मतलब क्या है, ये समझते हैं और स्टार्ट करते हैं बेसिक कॉन्सेप्ट से। इनिशियली जब भी कोई स्टॉक मार्केट या किसी म्यूचुअल फंड में इन्वेस्ट करने के इरादों से आएगा, उसे दो मॉडल्स ऑफ इन्वेस्टमेंट दिए जाते हैं, which are as follows. Number 1, SIP, or systematic investment plan, made specifically for those who are stuck in their 9 to 5 job cycle and don't have enough capital to work with. Then SIP is the ideal choice. SIP में expertise से ज्यादा discipline की जरूरत होती है, and this is exactly where majority of beginner level investors fail at. एक साधारण इन्वेस्टर की नजर में फॉलिंग मार्केट में इन्वेस्ट करना अपने पैसों को आग लगाने के बराबर है, and this is where they fail to see the bigger picture. If you are 100% sure that the investment you made is under a sustainable business model, no matter if it is in a stock, a mutual fund, or in an index, then the probability of your investments to yield ridiculous returns is 110% guaranteed. As sooner or later, the market will make its correction and bounce back to its intrinsic value. Now, this wraps up our point by highlighting why disciplined investing is necessary, especially in an SIP, and why declining markets aren't necessarily bad for you. Now, let's talk about the second investing model on our list, the lump sum investment plan. More suitable for those जिनके पास अच्छा खासा wealth, preferably greater than 3 to 4 lakh, बैंक में फालतू पड़ा हुआ है. No use, बस ऐसे ही बैंक में depreciate हो रहा है. तो in this case, rather than doing FD, lump sum invest करना is going to be the right choice. Now that we have covered the basics, let's directly dive into a few reality-based scenarios so we can get a better perspective of how SIP and lump sum investing models behave. Let's say 5 years back, which happens to be 2017, someone from your friend circle invested a sum of 1 lakh rupees and also advised you to invest in Tata Motors Limited. And as of 2017, as we can see in the screen, the price of a share of Tata Motors stood at around 400 rupees. Let's say at that stage of your life, you didn't have enough money to make a lump sum investment like your friend, but you also didn't want to miss out on the opportunity as the fundamentals of the stock seemed pretty sustainable for long-term investments. Hence, taking advantage of the situation, you opted for an SIP plan where you could comfortably make monthly contributions into Tata Motors Limited. Now fast forward to 2020. A global pandemic struck down global economies, taking down Tata Motors stock along with it as well. At this stage, your friend would be in a devastating position as his 1 lakh rupees has gone down south, while you on the other hand had only made a few SIP payments, and instead of putting a stop on your SIP payments, you dumped even more money than before to buy the dip, just like a smart and disciplined investor would do. And guess what? Cut short to 2022, the maturity date of your SIP plan comes by, and to everyone's surprise, your investments gave you returns of 110% despite a global economic crisis happening, while your friend barely made 1%, which is far worse than any investor would anticipate. Now, आपका कीमती समय बगैर जाया किए इन दोनों situations का deep analysis करते हैं and find out the technical aspect of why this happened. Let's begin with SIP. Number 1. Flexibility. Let's say your initial income is the paycheck you receive from your 9 to 5 job. Let's say it sums up to around 30,000 per month. And suppose at the time that you're watching this video, keeping inflation and other factors in mind, your expenses stand at around 25,000 rupees, including rent, electricity bills, etc. So at this point, your extra cash sums up to around 5,000 per month. बट आपके दिमाग में ये विचार आता होगा कि मेरे पास तो सिर्फ 5,000 ही सेव हो पाते हैं, इससे तो ना होने के बराबर कंपाउंडिंग होगी. बट गेस व्हाट? इसी तकलीफ को दूर करने के लिए ही तो एसआईपी इंट्रोड्यूस किया गया है, ताकि एक साधारण 9 to 5 जॉब करने वाला जो कि फाइनेंशियल फ्रीडम की इच्छा रखता है, इन्वेस्ट कर पाए विदाउट कॉम्प्रोमाइजिंग ऑन हिज लाइफस्टाइल. And wait, there's more to it. Let's say due to some unexpected circumstances, just like what happened with most of the salaried class around the globe during the pandemic, your salary gets deducted and you happen to struggle to save money for your investments. तो इसमें कोई चिंता की बात नहीं है. You can always put a hold on your investing plan, and then after a few weeks or months, whenever you feel comfortable in continuing back, you can pick up from where you left off. And no one is going to point a gun at your head or send a discontinuity notice for not being able to pay your SIP payments. By the way, at this point of the video, if you're still watching, then consider giving us a like, as it really helps us to bring more exciting stock market related content. Now let's move to the next big advantage SIP has to offer. Number 2, rupee cost averaging. As the name suggests, the phenomenon of rupee cost averaging helps you flatten out your losses and enables you to buy more units of a mutual fund or shares of stock while the market is going through a correction or a slight decline. Now, does that mean कि SIP का असल benefit तब होता है when the market is declining even on the smallest scale? Yes, that's exactly what it means. Technically, you're buying the dip. So by the end of the day, you're buying low so you can sell high. Let's understand this with an example. Let's say you've decided to do an SIP into a top emerging mutual fund. Let's consider Quant Mutual Fund as an example. Now, the Quant Mutual Fund offers a bunch of different fund schemes. We'll go for Quant Active Fund, as it is crowned as a leading equity-based actively managed mutual fund scheme in India and also outperforms commodities like gold and silver with a major gap. Disclaimer: the sole purpose of bringing up these names is to bring an up-to-date piece of educational content for you guys to learn from. You should evaluate your own facts and figures carefully before making an investment. Now what happens is that let's say you just made your first SIP payment of 5,000 rupees as of 16th November 2022, when the NAV of this mutual fund scheme stands at 481.04 rupees. Now, if we divide 5,000 by the NAV, which is 481.04, we get the number 10.39, which also represents how many units we bought off the Quant Active Fund. To understand the phenomenon of rupee cost averaging, we have to suppose that by the next month, the NAV of the fund drops 20%. But following the rules of an SIP, you still happened to make the payment of 5,000 rupees regardless if the NAV goes down or up. Now, what just happened is that you bought units off the Quant Active Fund at a 20% lower price. Though when we take a look at your investment's total net worth, it is going to be summed up as 4,000 rupees from the SIP of the previous month plus 5,000 from the SIP payment of this month, totaling up the investment's net worth at 9,000 rupees. Now, on the other hand, if you would have invested a lump sum amount of 10,000 rupees today, then by the next month, considering the NAV of Quant Active Fund drops 20%, then that would directly cut your losses and bring your investments down to 8,000 rupees all at once. And that, my friends, is the advantage of rupee cost averaging, which is only possible if you happen to do an SIP. However, just as every cloud has a silver lining, lump sum investing also has its advantages. Now, if you consider yourself a pro investor and know how to time the market, then lump sum investing is the right choice for you. SIP on one hand is a no-brainer, as you don't have to constantly monitor and predict the market. Lump sum on the other hand is only beneficial when you're 100% sure that the market at the moment is at a base support level and will bounce back and rise in the near future. This position of the market is when it is the right time to make a lump sum investment in the stock market, as that is only when you can pair huge corpus of your lump sum investments along with the power of compounding. A simple example of it is that a person who might have invested a large sum of money during March 2020, when the market was at its lowest point, would be much happier and satisfied with his profits than a person who invested into the market after the dip had passed. Now, to sum up today's video in simple terms, SIP has the advantage of rupee cost averaging, protecting your money in a declining market, while lump sum investing works best at compounding your investments. SIP is convenient for salaried working class and teaches disciplined investing, while lump sum is convenient for those having big sums of cash sitting idle in the bank. SIP is a no-brainer. No need to be an expert and time the market. The best time to start an SIP is to start now, while lump sum only reaps big profits when the dip is bought. SIP also offers flexibility to be stopped or cancelled anytime. while in the case of lump sum investments, your money is locked up until you lose patience. So when are you planning to start your investing journey? Is it going to be mutual funds or are you going for stocks that offer big dividends? Let us know in the comment section below. And if you've learned about the power of SIP, then make sure you press the like and subscribe button. And if you're struggling with the money game, make sure you watch our video in which we summarize one of the most influential books of this decade, The Psychology of Money by Morgan Housel.